Listen, today we're doing our accountability and coaching group. You can jump on at 11 o'clock Pacific Standard Time, just in a little bit here, and meet a couple loan officers and realtors from around the country. It doesn't cost you anything. Fill out the information down below, and make sure you stick around for the end of the show because we've got something that actually could put money in your pocket. Okay, now, I talk to agents who say, we have more inventory, but absolutely nothing's moving. I hear this all the time. Econ 101 tells us that when supply increases, as we've seen, prices go down. Not in housing and not this time.
So you can see median prices, they keep climbing. Here is monthly supply. It tracks almost exactly like prices. Look at these side by side. Now, what we'd expect to see is with monthly supply climbing, we'd see prices start to drop. But why isn't this the case?
For starters, we are dreadfully understocked with enough inventory. By the way, here's a graph of that.
From NAR, existing home sales slid 0.7% in May to a seasonably adjusted annual rate of 4.11 million. Sales descended 2.8% from 1 year ago. The median existing home sales price jumped 5.8% from May of 2023 to $419,300, the highest price ever recorded and the 11th consecutive month of year-over-year price gains. The inventory of unsold existing homes grew 6.7% from the previous month to 1.28 million at the end of May, or the equivalent of 3.7 months supply at the current monthly sales pace.
So we know prices and interest rates make buying a home prohibitive. We learned that in a painful way in 2023. What we also learned in 2023 is that 99% of Americans can't afford to buy a house. In what world is this acceptable? How did our elected officials let us get here? That's not for me and you to solve. But I'll tell you, they're all in bed with big business, and in our case, BlackRock and Vanguard. I'd blame them. So in 2023, we learned that most of these potential home buyers decided to rent. And when you rent, you sign a lease. And when you lease, you usually sign a 12-month lease. So this article that you're looking at from Watch Guru was penned in November of last year. But if you think about it, this article was penned after many of those potential buyers signed their leases. That's why I wrote the article. That would put the wave of existing home buyers who signed those one-year leases back on the market right about now. So we should, I think, see more buyers to come on the market to get some of these houses. The question, are you going to be the loan officer who's going to get them?
So the reason homes are not moving is fewer buyers. The difference could be now that those one-year leases are up. The truth is that many of the 99% who could not buy probably could have if loan officers were better coached up on non-QM loans, as you can look at bank statements, 1099s, or even certified accountant documentation, even for second jobs.
That's such a great point. Have you guys ever thought of that? A loan officer could run a file and get it kicked back because the income not used or not usable for a second job is going to push your ratios way too high. Yet, if you were to send that file to a non-QM lender like Oaktree, you could use that income, lower your ratios, and bam, you got an approved deal. Now, I know this is happening as we're closing a deal right now that was deemed unclosable by another loan officer, and this thing just flew through with Oaktree, which brings me to my next point.
You're a loan officer and you're not at the top of your game with product knowledge. You're doing a disservice to your clients and the industry. But more importantly, your days in the market ahead could be limited. Now, you can go to Oaktree at nonqmexpert.com and their account reps will coach you up on everything non-QM. Everything. One-on-one. And you can find their information down below in the comments. By the way, not to mention, they'll give you the best price and service when you place those loans. Does that make sense?
Well, I sure hope so. And think about this, because homes are sitting longer, home flippers are going in and getting offers accepted that they wouldn't even have looked at just a few short months ago. Home flipper profits increased for the third time in the past 4 quarters. Now, this is according to Adam. The typical profit margin for a flip is an astounding 30.2%. 30.2% in this market.
Can you believe that the average flipper just netted $72,357 per flip per house?
Now, with this information, why on earth isn't every single loan officer and realtor in the country right now running down their mom and pop investors? Why isn't every realtor just manically searching for homes that can be had? Look to your expired and don't go there for listings, rather go there looking for flips. Why isn't every loan officer doing the same thing? Because for 72 grand, I mean, that's a downright vulgar number. Everyone would do this if they could. So find necessarily not the person who who can do it. Rather, find the person who wants to do it. And then put your Jedi sales skill to work and take that person and get them in the investing game. It's $72,000 freaking dollars. Now, as for finding a great flip home investor, I want the realtors and lenders out there to listen up. I want you to call us, reach out to us down below, because we can hook you up with the easiest, do everything for you investor. Everything. And for that, you're going to get paid 50 basis points on every deal that investor ever does going forward. All you got to do is just make that handoff and they assign the investor to you. Fill out all the information below and we'll get you guys dialed in. Listen, right now, we're passively closing $1.4 million this month just for handing off investors. See, just for handing off investors. See what's going on here? We're solving the lending and real estate world while putting more money in your pocket. And the cost to you is absolutely nothing. You just got to reach out to us. Now, if you'd like to reciprocate for all of the goodwill that we're sharing with you, share our show. Subscribe to our show so we can send it to you every day to start your morning out. I hope this helps, and we'll catch you guys manana. Later, skaters.